Okay.
Good morning, everyone. I'm Emily Andrews. I'm the Executive Director of the Missouri Gateway Green Building Council, and we are here for our third Friday of the month coffee break. This is the third session in a series on ESG, and we're excited to have a cup of coffee and hear a hot topic presentation. I'm going to turn it over to Brandon Bierhoff from our Education Committee to introduce today's topic and speaker.
Thanks, Emily. So I'm Brandon Bierhoff. I'm from the Education Committee. So we're excited to feature this opportunity with our Missouri Gateway Green Building Council. And the goal of our coffee breaks are really to provide an opportunity for our community to engage in conversation around topics. And our theme for today's conversation is sustainable investing. So today I'm excited to introduce our special guest, which is Robin Diedrich. She leads the sustainable investing at Edward Jones, building a sustainable investing offering for the firm's wealth management strategy. She provides strategic direction and thought leadership in collaboration with Edward Jones leaders and stakeholders to create the advice, planning, products, and services for clients who wish to invest sustainably to meet our personal goals. Diedrich has 30 years of investment experience to equity markets, applying the firm's investment philosophy to decisions and recommendations for Edward Jones clients. She most recently served as the director in Securities Research, leading an analyst team covering the consumer communications, energy, and technology sectors, and was responsible for managing the equity income buy list dividend portfolio and helping develop Edward Jones's advice and guidance for sustainable investing. Diedrich is a member of the CFA Society of St. Louis and CFA Institute. In 2022, she earned the CFA ESG Certification. She is active in the community, serving on the board of directors of the St. Louis, Kansas City chapter of the JDRF organization to advance breakthroughs for type 1 diabetes and sits on the investment committee for the Lutheran Foundation of St. Louis. So, just a little bit of a rundown. If you would like to engage in the conversation, feel free to jump in and ask questions. You don't necessarily have to be called upon. Be mindful of others, not to jump over anyone. If you want to jump in, go ahead. You can, and you're not able to jump in, go ahead and you can raise your hand and I'll get you into the conversation later. And then just try to keep yourself muted unless you're speaking, just to avoid some background noise. So without further ado, take it away, Robin.
All right. Well, thank you, Brandon, and thanks, Emily, for having me. Good morning, everyone. Yes, happy to share more about sustainable and values-based investing and what we are doing at Edward Jones to offer this to our clients. So we talk about it as investing with purpose, and these are really two very similar but different strategies around sustainability and values-based, and we'll talk a little bit about how they're similar and different and some of the investment options we have here at Edward Jones. Thinking about this kind of in a simple way is just how do you invest with purpose, kind of beyond profits alone. So thinking about sustainability, just the term itself, thinking about a common definition is to maintain or support a process over time. So most people think about sustainability. The first thing that comes to mind is sustainability of the planet and sustainability of all living things. And that is certainly a huge focus for this area of investing. But it goes beyond that as well. It's also sustainability of businesses and organizations that serve their stakeholders, their employees, their communities, their customers. It's also about sustainability of communities and society as a whole. So think about sustainability maybe a little broader than what maybe first comes to mind. But as we think about this from an investor standpoint, all those things are being considered. And then values-based takes it almost a step further and maybe even close to being more personal for a client or for an investor that can really hone in on and target some very, very specific areas that are important to a client. That could be certainly in the environmental space. It could be something that is a social cause or issue. It could be even faith-based investing. So there are a lot of ways to invest with your values. So we know a lot of interest in this type of investment style has been growing over the past many years. It's not necessarily for everyone, but we think it's really important at Edward Jones to have these as options for our clients. And it is 100% their choice to do this. So we're happy to make this an option for our clients. We want to make sure that we've got this kind of in our arsenal so that our clients can invest beyond just for profit. So there's many motivations that clients may have as they're thinking about how to do this and what makes sense for them. So maybe it's just simply aligning with a value or two that are really important to them. Maybe they have identified a specific purpose. We know retirees identify having a purpose as one of the most important things they need for a successful, happy retirement. And so being able to apply that thought to their investment portfolio could be a very unique way to do that and live that out. They may want to just encourage better corporate behavior. They may want to have a very specific impact in mind that they want to help the environment or the society in a positive way. So if it's emissions and thinking about I really want to think about how my portfolio can help impact the reduction of emissions in the world, in the environment, then I think that is certainly something that can be targeted from an investment standpoint. Or maybe also a combination of these things to pursue an investment opportunity. As we see, some of these areas are growing very, very quickly. Green energy, clean energy being one of those. Thinking about it from a efficiency standpoint, clean tech and artificial intelligence, and some of these areas of technology are certainly a fast-growing opportunity. So also from an investment opportunity standpoint is another motivation. So as we see kind of how this what's the demand? What is this looking like? Well, there are a lot of investors that are interested in this space. Almost 80% of investors say that having a conversation about their values would make them more loyal to their financial advisor and really change that conversation. So we want to do that at Edward Jones. So certainly having that financial understanding a client's financial goals are important, but we think it's important to go beyond that and think about what other non-financial goals they may have as well. And the real sweet spot for sustainable investments in particular, as you may be aware, is even changing and growing with the younger population. And so as we think about millennials, they are very drawn to this space. So a number of millennials, and I would say even Gen X investors are even more interested in this space. Women investors tend to be a little more interested as well. So a lot of important pockets of investors, and where we think some of the future growth in wealth is going to be interested even more so in this sustainable investing space. So we have seen demand grow in this area. As we talk about kind of this wealth transfer, there's almost $84 trillion of wealth that is set to transfer hands from kind of the current holders to kind of the next generation over the next decade or two. Again, this is kind of the sweet spot for millennials and others that are going to hold a very large chunk of that, over 30 trillion of that going just to millennials alone. So we're seeing growth in these assets. This is a picture of just in the U.S. alone, and U.S. is kind of behind the rest of the world a little bit in some of these investments. Europe is certainly further ahead, but just in the U.S., we've seen tremendous growth in the past few years, and the expectations are this continues to be a new and growing space in the industry. So certainly something that we think more investors are going to be paying attention to, and certainly more financial services companies are going to be doing more to offer more options in this space. So, what do investors care about the most? Well, environment tends to be kind of the number one topic that comes to the kind of services when you ask and you survey investors. So talking about environment generally, certainly the atmosphere and emission reduction is usually top of mind. Biodiversity, pollution. We think it's important for all of those, kind of a very full picture of the environment to be considered. But you can have investments that have a broad lens looking at environment issues, but also very narrow. So, there are some different options there. Human rights, safety, and social equality are probably the second biggest issue that is cited in terms of what investors want to see in their investment portfolio. And then ethical issues, social harms, and morals being represented in their portfolios is another big topic. So there are strategies, again, to kind of focus on, as narrow and as broad as you would like. So we'll talk a little bit more about, so how do we define this at Edward Jones? We do put our investments into two different buckets. So we do think there's a difference when it comes to providing that advice. So we certainly are still focused on financial return, even when applying these non-financial goals to a client's wishes and portfolio. So sustainable investing, we define as a investment process or decision-making that considers environmental, social, and governance factors in a broad sense. So looking at, potentially hundreds and thousands of data points that are considered in the analysis process through the lens of looking at them as risks. So thinking about how is a management team and that board managing those risks for this company, and also thinking about them as opportunities. So companies that are in a particular industry may have an opportunity to actually, profit and benefit from something that is also helping the environment or helping with social issues. So from both of those lenses, that can be a consideration within an investment strategy. But in this bucket, we would say that opportunity is still focused on the financial return. So they're looking at ESG factors, but they're also just right alongside considering the financial return. And the financial return is still very much a priority. And then in the values-based side, we look at that a little differently because this is more targeted and can be a more narrow, less diversified way, but certainly a more targeted way to get to that value that the client is seeking or the investor wants to see a return on. So in this case, we believe that some of these, because you're being more targeted, excuse me, and intentional about what the value is that you're seeking to replicate in the portfolio, that can be prioritized ahead of a financial return. Not always, but can be. And for that, we start to think about our guidance a little differently there. And just make sure that clients are aware that financial returns, may be something to consider that could be a trade-off. There may be risk of more volatility in a portfolio that has values-based investments. So a little bit different guidance that we would provide with sustainable investments. We would say those, because there's that focus on financial return, we believe performance there is neutral. However, on values-based, there could be potential for some trade-offs, and we want to make sure that expectations are properly set with investors. So let's take a look at maybe this a little more in terms of some examples. To go in sustainable a little bit more, we kind of talked about a very high-level definition of sustainability. If we think about what kind of questions investors would be asking, or what kind of questions the investment manager would be asking in this case, if they were performing an ESG intentional strategies, they're focused on these ESG factors in the analysis. They would ask, like, what is the company practicing good policy towards their mission strategies? Is the company proactively considering and improving its impact on its supply chain? So looking at a supply chain globally, is that supply chain having a positive or negative impact on the planet or society? And are there ways that they are seeking to improve that? And are they kind of, following the policies that they have already set for themselves as a company? Are its products safe for consumers? So thinking about product liability, certainly in the case of, healthcare companies tends to be, a very big issue for companies like that. How does the company value safety for its employees is another question we would ask. How do they look at wages? They pay fair wages to employees and have equality across their workforce. Is the company being innovative? Are they thinking about new ways to reduce waste and reduce pollution within their process? So those are just some of the many, many questions that an investor would ask of a company, as well as just looking at the evidence of not only what a company reports, but also what other industry organizations may report about that company or the industry. Certainly any controversies that have surfaced through legal channels or through the media that we would know about a company. All those things become considered when thinking about, is this company a good organization to consider for sustainable investment. A company that I would point out, just to kind of bring this home a little bit more as an example, would be a Coca-Cola, for example. They have a very strong focus on water scarcity as one of their key issues at the company. And you think about Coca-Cola and what they make, they are a huge consumer of water for their beverage portfolio. So it's a huge focus for them. They realize that water scarcity and waste management globally are huge issues. So they have a number of initiatives at their company to address this and improve not only what they are doing, but to also improve externally the issue on a global basis in the communities that they serve. So just a couple of things I would point out about their strategy. Since 2015, they have been really committed to, in replenishing water usage. Again, they're a huge user of water. And so since that time, they've replenished more than 100%. I think last year it was close to 150% of their own water usage. 10% water efficiency improvement across all of their operations globally since 2015. And they have an initiative called RAIN, which is Replenish Africa initiative that sponsors clean water, sanitation, and hygiene products that impacts 6 million people in Africa. So just a few examples of what a company like Coca-Cola is doing, maybe brings this to life a little bit. And then things, to think about what we're doing at Edward Jones, promoting healthier futures is a key tenet and focus of our strategy as well. Thinking about a financial services company like we are in, and we were just talking before we started here about our own paper consumption. And it's a huge issue in the financial services industry and something that Edward Jones has been committed to improving as well. So we have been, focused on this, and we have saved over 10 million pounds of paper last year. And that's equal to 120,000 trees, and over 91 million pounds of emissions have been avoided. So thinking about things like that, seeing results like that make me very proud to work for Edward Jones. And then externally, to our clients, offering these sustainable investment choices are something that is important to our strategy as well. So let's take a little closer look at what some of these options are, and we'll close it out here in a minute or so. So to take this a little further, how do you invest? How do you kind of put this to practice within sustainable? That sustainable category, because ESG, being very intentional about ESG broadly. You can certainly invest in individual companies. But there are, as we've been really talking about, kind of ESG focused mutual funds, ETFs, and separately managed accounts where you own the underlying stocks. But those are all, there are many, hundreds of funds in this space to choose from, and there are some that we recommend at Edward Jones. And then from a values-based investing standpoint, we look at this through 4 different strategies. One is thematic, and that's where you can really target in on a specific issue. And there are funds that may focus just on clean energy, funds that would focus just on women's opportunities, such as women's owned businesses or women-led institutional money management, water funds as well that focus just on the issue of water. So just a number of ways to invest thematically. Exclusions is another way, another strategy to employ in your portfolio that may be screening for companies through the individual stocks or even through packaged products like funds. What companies are involved in, what products they sell, and you can apply your own values and screens to particularly avoid some of those areas and where you are invested in. Faith-based, as I mentioned, there are a number of options here, mostly in Christian, Catholic, and Sharia law, but there are others as well. And then impact investing, a little bit different here. This tends to be more in the private sector, in the private markets, but it can be very, very focused. And this really difference here is where it's a very measurable impact on a very specific project. Typically, it's a project finance level where you're financing a low-income housing project or education or water project. So as you kind of move across the scale here, as you see at the bottom, from sustainable into values-based, you kind of shift the focus more and more towards that impact focus. And then finally, one of the questions I always get, and I'll kind of end with this, is about performance. It's a concern that always comes up, like, well, okay, this sounds great, but I still want to make money at the end of the day, and I am investing for my retirement or whatever my financial goals are. So our guidance is certainly rooted in understanding expectations and also the performance. So when we say that we believe sustainable investing is performance neutral, it's because they tend to be very broad nature. They're very diversified. They tend to have a very high quality bent to those portfolios. Companies like Coca-Cola that are doing a lot in this space, they tend to show up very well and be included in a lot of portfolios and strategies that are ESG intentional. And so performance here is very good and has been very good over the last few years. This looks at the first half of this year, 1 year, and 3-year look. The first bar there in black is the S&P 500, just comparing it to the market. The orange there, I would say, is the S&P 500 ESG leaders. So thinking about kind of these big companies that are showing up well, that are rated as kind of ESG leaders in this space. You can see in orange have done very well in terms of performance. And then the green and yellow bars are showing some of the Paris-aligned climate grouping and clean energy grouping, some more of that clean energy focus. And you can see there as well in the long term, they've done, look at the short term, they have underperformed. They've had a really strong performance. They kind of pulled back this year. But looking at the 3-year performance is still very, very strong and comparable to the market. Even despite, again, the blue bar just kind of shows you that the energy sector there just as an outlier, just to kind of show what the difference has been. And so even with that, even with the energy sector having done very well, which tends to be screened out of a lot of the ESG intentional portfolios, you can see we've had pretty good performance across this space. So I will leave it with that and see if there are any questions, and certainly interested if anyone has invested in this way in the past, if they have had any successes or challenges that they would like to share. Would certainly love to hear about that. So.
I'll just say I have not, but it's something that I am looking into and looking to do in the future. I am curious because I had seen a little bit of this pre-pandemic, and there was a recent article that I read in the news about the performance of some sustainable indexes pre-pandemic and then post-pandemic and how they've sort of decreased. Do you have any knowledge or about that or why that might be occurring?
Yeah, I would say for the broad ESG intentional funds that we would kind of put in that sustainable bucket, our guidance on performance is that it's neutral. And by that, we mean we would expect to see, and we have seen a normal distribution curve across hundreds of strategies, hundreds and thousands of funds in this space. So they're going to be underperformers, kind of the middle range of performers, and outperformers. So kind of a normal distribution curve is what we would expect. It would look like any other traditional investment asset class distribution of performance. So that's kind of what we mean by neutral performance would be our expectation. What we've seen here is most recently good performance in these areas because a lot of the ESG intentional funds tend to be bent towards higher quality companies. They also tend to have a technology focus. Technology tends to be very clean from an environmental standpoint, oftentimes, and so those companies also have been rated pretty well. So there's a lot more weight towards technology. There's also an underweight towards energy, which was kind of the point of kind of showing the energy sector there. So as kind of pre-pandemic, energy stocks, so I think there can be a shift in terms of how energy is performing, how technology is performing. So it just depends on the time frame maybe that was being looked at, and certainly it's a case-by-case basis. I mean, this trying to apply a general performance standpoint to a wide group of funds, we would say you really need to look at the individual fund manager, and the strategy and how that's being implemented before making any investment decision or consideration of performance. So, but I think generally you're going to see some shifting based on sector is going to be a big driving factor, as well as the quality bent.
Other questions from people?
I don't have a question. It's more of a comment. I think many years ago when I was kind of first starting to look at sustainable investments, I found it really challenging to find any options. And so it's exciting to me to see that this landscape is shifting. And I really think that the ESG discussion is a lot of what has turned the needle, both on this and also just things like, moving our utilities towards net zero goals and things like that, because they're seeing this broader landscape. So it just makes me happy to see that these options are available. I think there are still though some challenges, like if you are working on if you're a retirement fund through work, it's tied up through what's being offered there, and how can you manipulate that to be more sustainable, or to convince your employer to be investing in more sustainable funds so that you're kind of reaping those benefits as well. And I'm not exactly sure how to navigate that one, but
yes. Well, yeah, I mean, there's just many more options available, and the track records are also becoming longer as we go in time, right? So you can, from an investment standpoint, having a good track record to be able to evaluate and look at and really understand how well a money manager is doing in this space is important. So I think as we continue to go through time, not only will you have more options that continue to be introduced, but you will have just more data and better data to evaluate and make good decisions. I see there's a question in the chat about third-party vendors' ratings on companies. No, that's a good question. So there are a number of third parties that do research on on companies and provide ratings, not only on companies, but also on countries and others, but primarily on corporates. And we subscribe to a couple of those, and their methodologies are all very different. And we, having dug through them, they're all based in kind of similar, kind of start off similarly by gathering thousands of data points, not only from the companies and what they publish, but also from sources again, like the media and industry organizations. And so kind of putting that all together. But then once they start to kind of funnel that through to come up with a rating, as you can imagine, you're taking thousands of data points that are focused on the environment, focused on many social issues, governance issues, kind of funneling all that to an A rating or a B rating or what have you. It kind of starts to water down the impact, and they all have a little bit different way that they do this. So it's important to understand, like, go beyond the top rating. I mean, it's kind of a place to start, but I think where the value in those rating companies can be is kind of some of the underlying data, and really reading the research is where we find impact. And I would say all the money managers that we have talked to in this space, they really do their own due diligence and research, and they certainly use those third-party providers. But most funds do not just look at those ratings and take that as the way that they would kind of choose an investment. They go well beyond that, because the ratings themselves are very different. Again, the methodologies are different, and it's really the underlying data that can be more useful. And even with the underlying data, that we know there's still challenges, right? Companies are still really trying to figure this out and learn how themselves to report this in a consistent way.
That's for sure.
Mhm.
So if there's not any other questions, we are gonna wrap it up. So Emily.
Yeah, thank you so much, Robin. We really appreciate you being our guest today. And I think that last comment you made, we just did, Abigail spoke at a in-person program we did on ESG connections with LEAD. And that was a lot of the theme of what we heard from her and other panelists, was like, everybody's really still learning how to do this reporting, how to gather the data, how to make it meaningful to people. So I think it's just, as more and more people do it, I think we'll see more and more opportunities. But anyway, thanks so much, everybody, for coming. And I think the next thing we have on our agenda is a member social on November 14th. That's going to be at 8 a.m. at Innova, which is a furniture manufacturer in the Grove area. And then that'll be followed up with a third Friday coffee break on November 17th, featuring Tom and Carol Brayford, longtime members of the chapter who are working on sustainable community efforts in just kind of just north of the central corridor along Olive. So we look forward to that. So have a great weekend, everyone. Enjoy your Friday, and Brandon, enjoy your time at the lake. Thank you. Bye-bye.